Hey everyone, and welcome. Today we're digging into the US stock market's very strange day on Monday, September 16th, 2024. It was a day that really told two completely different stories. One that started with a bang, but ended with, well, a bit of a whimper. So let's break down this day of duality.
So here's the big puzzle we're going to solve. The market got some really solid economic news, the kind of news that should have sent stocks flying. So why on earth did the trading day end on such a nervous, uncertain note? Let's unpack that paradox.
So here's how the day went down. It kicked off with a big wave of optimism, all thanks to some fantastic retail sales data that came out. But that early confidence just didn't hold. By the time the closing bell rang, the Dow, the S&P 500, and the Nasdaq had all drifted back down into the red. It was a classic case of a market fade. You know, you can really boil the entire day down to two giant forces playing tug-of-war. On one side, the biggest positive was definitely the good news we were hearing about US-China relations, but pulling hard in the other direction was this major fear of a sell-the-news event. And that fundamental tension, that push and pull, it defined the entire session. Okay, so let's dig into the details of this whole conflict. The market's anxiety wasn't just random. It was all lasered in on one massive event that had pretty much every trader holding their breath. And that event was the start of the Federal Reserve's FOMC meeting. Now, this is the big one. It's where the Fed decides on U.S. interest rates, a decision that can literally send ripples through the entire global economy. And going into it, the market was almost certain a rate cut was on the table. So this is the most important part to understand. The market wasn't really nervous about the rate cut itself. Nope, everyone expected that. It was already priced in to stock values. The real anxiety, the real mystery, was all about the future. All eyes were glued on what the Fed would say next, especially in something called the dot plot, which is a chart that shows where Fed members think rates are headed. That was the real nail-biter. Now, about that good economic news. August retail sales came in at a super strong 0.6%. This absolutely crushed expectations, which were way down at just 0.2%. So on the surface, this looks fantastic, right? But here's where that theme of duality really kicks in. That strong headline number, it wasn't telling the whole story. In fact, it was hiding a pretty worrying trend just beneath the surface. Here was the problem. When analysts really dug into the data, they found something interesting. All that spending strength, it was coming almost entirely from high-income consumers. Meanwhile, middle and lower-income families were actually starting to pull back. This growing divide, this economic polarization, raised a huge red flag and made everyone ask, is the American consumer really as healthy as that one number makes it seem? And this brings us right back to that sell the news fear. This quote here from Jonathan Krinsky at BTIG just nails the mood perfectly. The idea is simple. Since everybody already expects the Fed to cut rates, the good news is already baked into the price. So the fear was that as soon as the cut becomes official, traders might just say, great, thanks, take their profits and sell, which could cause a pretty sharp drop.
Of course, the market never operates in a vacuum, and there were global headlines sending their own mixed signals. On the plus side, we saw some positive progress in the U.S.-China trade talks. A major new nuclear energy partnership was also announced between the U.S. and the U.K. But balancing that out was a big negative. China launched an antitrust probe into NVIDIA, and that put a ton of pressure on the whole chip sector.
Okay, so we've covered the big picture, the macro stuff. Now let's zoom in a bit and see how these themes actually played out for some of the day's most talked about individual stocks. Here's a quick snapshot of the day's big movers. First up, Webtoon Entertainment just skyrocketed, up an incredible 39% after announcing a new partnership and a big investment from Disney. Then you have Baidu, which surged almost 8% on news that its new AI model was performing at a similar level to GPT-5. Tesla got a nice 2.8% bump after CEO Elon Musk bought more shares. Oracle gained on reports it was getting ready to manage TikTok's US data. And then on the flip side, you see NVIDIA down over 1.6%, feeling the direct heat from that Chinese antitrust investigation we mentioned. All right, let's zoom back out. We've seen what happened and why. So what does all of this actually mean for you as an investor? How should we even think about what the market might do next? Just to see how uncertain and divided the market really was, check out these scenarios from the pros at JP Morgan. They saw a nearly 50% chance of a dovish cut. That's a cut that signals more support for the economy and would send stocks up. But they also saw a 40% chance of a hawkish cut, one that would disappoint investors and send stocks down.
I mean, when you look at those numbers, it was basically a coin flip. And here is a really crucial piece of historical context that kind of adds a layer of caution to all this. Now, you'd think a rate cut is good news, right? But historically, it's often not. In the 6 months after the Fed starts a rate-cutting cycle, the S&P 500 has actually fallen between 60 and 70% of the time. And why is that? Well, because rate cuts are often a signal that the Fed is actually worried that the economy is slowing down. So heading into the big Fed decision, there were really two key risks for investors to watch. First, forget the actual rate cut for a second and watch that dot plot, the Fed's own forecast. If it signals fewer cuts in the future than the market wants, that's a hawkish signal that could easily trigger a sell-off. And second, there was the whole issue of Fed credibility. If this rate cut was seen as the Fed just caving to political pressure, that could seriously damage long-term trust in its independence. So to wrap up the advice here, the key takeaway from a complicated day like this is to always look past the headlines. The quarter-point cut itself, that's not really the story. The real story is what the Fed signals about the future, and whether that weakness we saw in consumer spending is a sign of bigger trouble down the road. And that leaves us all with this final question. The market is holding its breath for the Fed's decision. But is it holding its breath with hopeful anticipation or with deep-seated anxiety? After a day like September 16th, the answer seems to be, well, a little bit of both.